All right, everybody, I think we're going to get going here. Welcome to our third installment of our town halls on the PPP, the Paycheck Protection Program. I'm Mike Crabtree. I'm a tax partner here at Boulay. Today I am joined by Tom Johnson, who's also a tax partner at Boulay, and Jeff Filler, who's a manager in our audit practice, handles our risk advisory area, and he's been very much involved with PPP loans and will continue to be. And our special guest this time is Liz Lambrecht from Cooley Bank, who heads up their SBA practice. And she is going to be kind of giving us the word from the street of like how this process is really going so far now that the forgiveness applications are eligible to be submitted. So since we met in July, there has been some additional guidance, not as much as we would have hoped, but I will start off and go through that, and then Liz will talk for a little bit, and then Jeff's going to talk. And during this whole process, Tom Johnson is going to be collecting your questions and interjecting, feeding those questions to us as we go through, and then we'll have time at the end too for general questions or specific questions, as the case may be. But yeah, so use that Q&A box, I think, which is down in the Zoom program here. The Q&A box is the one you want to use for that, and then Tom will send the questions to us. All right. I will get us going here. So the guidance that we've received since July, since our last meeting, we have a couple additions to the general FAQs, and then we had a whole new set of FAQs on loan forgiveness itself that came out at the beginning of August. And then there also was some new interim final rules that are really kind of the same level as Treasury regulations. So, and they have provided some surprises, and in a lot of cases just kind of confirmed stuff that we had known and that has been in the instructions and other things. But there were some surprises in this that we'll get to. Oh, and before I skip ahead, the regular FAQs, the only real thing of substance there was they confirmed that vision and dental benefits do qualify as group health insurance. That was kind of something we had assumed, but it was nice to see it in black and white. The real interesting piece was the FAQs on forgiveness. We'll go through those. I didn't list them all out, but these are really the highlights. And one of the first ones is they tell you that sole proprietors, independent contractors, self-employed individuals that don't have employees should use the EZ form. And there's really no reason not to. The EZ form puts away with all the payroll stuff that the long form has, and you don't need that if you don't have any employees. So they just confirm that and tell you right off the bat. If it's just you, you should be using the EZ form. They also confirm that that no payments, if there are payments at all through this process, if some of your loan is not forgiven, then there won't be any payments due until the earlier of 10 months from the end of the covered period, or from the time that the SBA reimburses the bank for their forgiven piece. So, and that kind of gets back to that rule. It says if you don't file for forgiveness, this thing's going to turn into a loan starting at 10 months after the end of the covered period. And as we know now, the covered period is 24 weeks. The people who got their loans before June 5th can opt for the 8-week covered period, but the default covered period is 24 weeks. Another thing that the FAQs clarify, or kind of give some examples on, it talks about how payroll costs incurred before the covered period but paid during the covered period are eligible for forgiveness. And that's something we understood, but it was nice to see some examples on that. And they do lay out a pretty good example where they talk about a a borrower that's got a covered period that runs from April 20th to Sunday, October 4th. And so their first payday, let's see, I remember this example, during that period is April 24th, which you're paying through Saturday the 18th. So you're actually paying wages in the covered period that were earned before the covered period started. And they say, yep, that's totally cool, because as long as it's paid during the covered period, the front end. And this is kind of gets back to that question that we had originally, which was, is this kind of a cash basis thing or accrual? And more or less it's cash basis up until the end. And then at the end, there's a little bit of accrual aspect to it. And that's the next bullet point, because payroll costs that are incurred within the covered period, but not paid until the next pay date after the covered period, are also includable in the forgiveness calculation. And the same kind of example goes there, where if the covered period ends on, in this example, October 4th, but the next regular pay date is Friday, October 9th, even though that, and in this particular situation, that payday on the 9th is going to include wages that were all earned by the 4th. So even though that payroll is paid after the covered period, those wages get included in the forgiveness calculation because they were earned during the covered period. And it was just nice to see that in black and white and have some examples to really clarify that. Another thing they clarified is that the gross income is the number we're starting with here. You know, it's the wage amount before any kind of subtractions for taxes or pre-tax things. It's gross income, the biggest number. And it can include things like tips, commissions, bonuses, hazard pay. Any kind of cash compensation is eligible for this. They kind of reiterate that, you know, every employee is subject to that $100,000 cap, so you can't go crazy with bonuses, but you can pay bonuses during the covered period and have them count. That's just good to clarify. And they also clarified some issues with healthcare benefits. Again, reminding us that it's only the employer paid portions that we're talking, because obviously the employee, anything the employee pays pre-tax is already in that gross income number. So we don't double up. And there was one line in there that kind of, I don't know, like, it's interesting, and it says expenses cannot be accelerated from periods outside the covered period. And I think what that means, what I kind of interpret that to mean, is you can't pay the rest of your healthcare costs for the rest of the year during the covered period and count them. And the fact that they use the word accelerated means, to me at least, that they are talking about expenses from after the covered period, because expenses that are from before the covered period that just happen to get paid during the covered period, I think are fine, or should be fine. So, and they also clarified, and this gets into some interesting questions about owners and owner compensation. They talk about how an owner of multiple businesses is going to be subject to one cap for the whole PPP thing. So if you have 3 different S corps, you're not going to get a separate cap on each one. You as the owner are just going to be subject to one cap. And talking about those owner caps, owner compensation caps. Owners are capped at the lesser of either 15,385 or 20,833, which are the 8-week and 2.5 12 computations on $100,000, because there's that overall $100,000 cap on compensation. So the maximum owners can get on the forgiveness calculation is 15,385 if you're using the 8-week period, or 20,833 if you're using the 24-week period. Or, and this adds another cap, 2.5 12ths of their 2019 compensation. So this looks back to 19. So if you're in a interesting situation where you didn't take, an owner-employee didn't take compensation in 19, we can't use anything for them in the forgiveness calculation. Or if they took a low amount, then they're going to be capped at 2.5 months worth of that amount. And the same kind of rule applies to owner retirement contributions. Again, 2.5/12 of their 2019 amounts. The FAQs also kind of remind us that S-Corp owner employees don't get to add on health insurance expenses like other employees do, because the way S-Corps work is those expenses are included in the S-Corp owner employees W-2. So they're part of that gross income figure that's capped at 100,000 or 2.5/12 of 2019. So we don't get to add that on for S-Corp owners. And then partners in partnerships or LLCs that are taxed as partnerships, you don't get to add retirement amounts or health amounts for the same reason that those retirement and health come out of the partner's self-employment income. So, and that's the number that's already being capped. So they're in a bucket that's already got a limit. So we don't get to add anything on top of that for operating partnerships and LLCs. There's also a line in there that talks about how compensation payments must be made during the covered period. So you should actually be making distributions to partners, LLC members during the covered period in order to count those in your forgiveness calculations. It's not just a function of what goes to the K1. And then the last thing is Schedule C, which is sole proprietors, or F, which is farmers. You use the 2019 Schedule C or Schedule F net profit amount, which is it's a line on your Schedule C or on your Schedule F. Gives you your net profit. And you don't get to add any retirement. Again, those same kind of reasons. There's similar rules on non-payroll costs as far as, at the front end of the covered period, paid even if they're incurred before, and at the end of the covered period, if they're incurred during the covered period but paid afterwards, we can include those. And there's kind of a nice example on that one too, that so the covered period in this example, April 20th through October 4th. On October 6th, the borrower gets its electricity bill for September. September is clearly within the covered period. They didn't get the bill until after the covered period is over, and then they pay it on October 16th. So they received the bill and paid the bill after the covered period was over, but it was all for September, which is in the covered period. So they get to include those non-payroll costs. In another item, the alternative covered period is something that is used for payroll computations in payroll only. So if you are choosing to use that alternative covered period, which starts with the first pay cycle during the covered period, just to make the data collection and computations easier on the payroll side. If you do that, if you choose that, it's only for your payroll costs. Your covered period for your non-payroll costs is still going to be what it is. It's going to start on the day you get the money, and it's going to end 24 weeks later. And so if you get the money on a Monday, your covered period is going to end on a Sunday. So it's literally day by day like that. So, and they also had an example and talked about, clarified that renewed leases count if the original lease was in place on February 15th of 2020. And this gets back to that rule that you can include rent expense in your forgiveness, but the lease had to be in place on February 15th, 2020. And I think what they're getting at here is, okay, I had a lease on February 15th and it expired at the end of March and I renewed it. it's not the same lease, but kind of, and what they're basically saying is it's treated as the same lease, even if it's a renewal of an original lease that was in place at that time, February 15th. They also clarified that the full-time employee, the headcount reduction tests includes all employees, even those that make over $100,000. Remember, the salary wage test only applies to employees that didn't make $100,000 or that amount in any pay period during 2019. And it also applies to people that were newly hired in 2020 for some reason, no matter how much they make. And then they clarified that the FTD reduction test doesn't include laid off employees that the employer offered to rehire, but they refused, which is a rule that we've saw before. They clarified that only cash compensation is considered in the salary wage reduction test. You don't look at retirement, health, all those additional amounts that go above that and get added to the payroll expense. It's really just the cash compensation that you're measuring if you're doing that salary wage reduction test. And they did clarify and kind of reiterate that if you got an EIDL advance, that advance amount is going to reduce your PPP forgiveness amount. And you'll recall that EIDLs are something, another CARES Act program that kind of happened simultaneously. And you can do both. You could get a PPP loan and then an EIDL loan, but just not for the same expenses. So you can get a PPP for your payroll and get an EIDL for some other business expenses. The EIDLs went directly through SBA, where PPPs went through banks. And with that EIDL program, when you first apply, they were supposed to give you an advance amount of up to $10,000. And if you receive that advance, then that basically gets backed off of your PPP forgiveness. Unforgiven amounts and the interest thereon are going to be repaid either over 2 or 5 years. The statute said 2, but then the PPP Flexibility Act increased that to 5, or allowed an increase to 5, essentially. Again, to be negotiated with your bank. The lender has the job of informing the borrower of the amount remitted to them by the SBA and the due date of the first loan payment, if there is one, if you didn't get 100% forgiveness. So those are the FAQs that came out at the beginning of August. There's also some interim final rules, one on appealing the SBA decisions, and it's very technical, and hopefully nobody has to appeal their SBA decisions, so I'm not going to get into those today. But the other one gets into some new special rules that I think are really pretty interesting. They clarified in this interim final rule that what they mean by owner-employee in certain situations is limited, because as you recall, there's all these caps on how much compensation we can include for owner-employees. And what they said in this interim final rule is that if you are a C Corp or S Corp shareholder employee, you're not subject to these owner-employee rules if you own less than 5% of the stock of that corporation. There's only C Corps and S Corps. It's not partnerships. But it kind of gives it a nice little de minimis amount there, because that is a question that has come up a lot for us. Is, what if I own 0.5% of the company? Am I still an owner employee? We didn't know until this rule came out and said, no, there's a threshold that you have to meet. The rule also talks about non-payroll costs do not include costs attributable to tenants or subtenants. I think what this got at was the example they had was, okay, I own my building for my business, but I rent out 1/4 of it to a separate business. I have $10,000 of mortgage interest during the covered period. And what the rule says is I can only include $7,500 of that because the other $2,500 is really allocable to the subtenant. And it's not my non-payroll costs, even though I'm paying it. And they talk about home-based businesses, and any expenses there need to be expenses that you deducted on your 2019 return for those to be included. The big, I think the big issue on this one, in this interim final rule that is going to change computations for a lot of folks, is that rent paid to a related party landlord is only forgivable to the extent of the landlord's mortgage interest expense during that covered period. So, I mean, a lot of our clients, a lot of businesses have an operating business inside a building. The building is owned by the owner of the business or their family or some other entity, but they're in two different entities. And the operating business, which is the borrower, pays rent to the other entity. And the rules say that we can deduct rent, and there hadn't been any guidance on related party rent. And it's a question that came up a lot because it's a very common situation. And what this rule says is that rent is deductible, but it's capped at that landlord's mortgage interest expense during that covered period. So if there's no mortgage on the building, then the rent is not includable. I think the idea there was that they want to put businesses that own their own buildings in the same situation as businesses that kind of separate it into two different things. So that, I know, is going to change the math for some people. But hopefully now that the covered period has gone from 8 to 24 weeks, these non-payroll questions are less important, because I think a lot of borrowers are going to get to 100% forgiveness just based on payroll alone. And the form says that you don't have to include these non-payroll costs if you don't want to, but you certainly can. Okay, so that is a quick summary, not that quick, on the new FAQs and the new interim final rules. At this point, I'm going to hand it off to Liz to tell us what all this looks like from the bank's perspective.
Well, thank you. I am going to, well, first of all, my name is Liz Lambrecht. I am an SBA lender. I'm the lead SBA lender at Boulay Banks. I have been a lender for around 30 years and an SBA lender for 10 to 13. So I've seen a lot, and what I'm going to talk about today is what I've been experiencing with the applications that we have received for forgiveness. Now, we did approximately 400 PPP loans here at Boulay Bank. And since the application portal opened up on August 10th, we have received maybe 24 applications for forgiveness. So not the landslide that we expected. Of those 24, we've submitted approximately 11 to the SBA, and in those 11, we have asked for full forgiveness. They are still sitting in a pending validation queue with the SBA. We have sent requests to the SBA directly and to our district representative to say, you know, what gives? Did we do something wrong? Did we not press a certain button? And both of them came back to us and said, you have 60 days to submit and the SBA has 90 days to respond. Please let us know if we can help you. Now, having dealt with the SBA for a very long time, what that says to me as a lender is that the SBA has not opened the doors to work on these yet. Perhaps the SBA expects that the process will change. Perhaps they don't want to deploy their contract workers until there's a lot of work for those contract workers to do. That's my feeling on it, but that's just my assumption. So what I wanted to talk about right now is actually the review timeline. When you are all you've spent all your money, whether you went for the 8-week program or the 24-week covered program, at that point, once you've spent the money, you have the option to fill out your application and send it into the bank. If you opted for 24 weeks, but you finished everything up in 15 weeks, you certainly can submit it. However, on your application, you still indicate that you had a 24-week period. We have submitted several of those to the SBA, and the SBA accepted them. Now, even though the SBA isn't processing them, the portal that we use does verify our calculations, the calendar dates, everything to make sure that it adds up. So we know that if we've made a mistake in the dates, it will catch us. But once the lender receives an application from the borrower, we have 60 days to review that application, verify all the information that's included in the supporting documentation, ask for more information if something doesn't make sense, and then the bank decides, does this borrower qualify for full forgiveness, partial forgiveness, or no? They didn't follow the process at all. They have nothing here. We don't think they have any forgiveness. We make that determination, and then that's when we upload it to the SBA for validation. If an application comes in that's incomplete, we can go back to the borrower and say, yes, you submitted the application, but you didn't give me payroll records or any indication of your lease, anything like that. And then the 60 days starts all over again when they submit the information. The 60 days only starts when the lender has a complete application. And I think that's important to know. Just because you've sent something into your lender doesn't mean your 60-day clock is going. It's going only as long as you submitted a complete application. Now, once we've finished that process, we sent you a notice that said, yes, we received your application, we reviewed it, we're recommending it for whatever, for X, and it's onto the SBA. Then the SBA has 90 days to review what we sent in. They can agree with the lender or not agree with the lender. They can ask the lender for more information. But in that 90 days can restart if they need more information. So it's really important that you send in a complete application right from the start. And then we can go on to the next slide. So most customers, or everybody, has the option of the 3508, which is the standard application, and 3508 EZ. Everybody is asked, people get really confused by these first three questions that you'll see at the top of the EZ, but almost everybody will fall into one of these. And if you can use the EZ, it's a lot simpler than the regular one. But so take a look at the questions, or the options here. If you have any questions, please let us know. And I think Mike has gone over this with you in the past, so it's probably something you're familiar with. But it is probably one of the most common questions that we get is, can I use the EZ? And if you are like an insurance agent and it's just you, and when you qualified, when you sent in your information for the PPP, you're an employee of one and you're still employee of one, then you're in. You can use the EZ. If you didn't make changes, you are in. As long as you can certify that, yes, I had 16 FTEs at the beginning and 16 FTEs at the end, then you go. You've got that in, and you didn't change anything. You kept those, and you kept everybody paid the same. Or, and the last alternative, yes, you had those same FTEs, but you were also closed during that time because of regulations. You were a restaurant, you were a bar, you couldn't open. You get to use the EZ. And the EZ itself is one page. It's very simple. It's very straightforward, but it really helps whether you're using the EZ or the standard to go to your payroll provider and say, do you have any packaged reports to help me with this? And almost every provider I've worked with since August 10th, Paychex, ADP, Velocity, they all have something ready for their customers. So it's a good place to start. And do you want to, I was going to make one comment actually back on the FTE question of, do I have to count this loss of an FTE if I offered employment and they turned me down? That's true, but you need to document that. You have to have a statement signed by that employee. An email from the employee says, no, I'm not coming back to you ever, no, never. that's not really going to count with the SBA. It needs to be, and this is going to be difficult to request from these employees, but if you can get a signed statement, that's the best. And the SBA will ask for documentation if the loan is ever reviewed. So what are they counting on? And I get this question a lot too. What counts as supporting documentation? And I feel that customers at the beginning were perhaps a little misled because they were said, oh, just send in whatever you have from your payroll provider, or just send in your QuickBook report. But as the rules and the FAQs have come out of the SBA and the Treasury Department since August 10th, they are getting more and more specific, I think, with each interim rule that comes out. So now the SBA wants something a little bit more direct. Yes, the payroll provider report, but then also some proof of that payment, like your quarterly tax reporting, canceled checks. If you're a self-employed person, they want to see the check. So like Mike said, be cutting yourself checks because you're going to need to prove out that you made these cash payments to the employees. Same thing with the benefits, the health insurance and the retirement. You need to prove that you as an employer made those payments. Another area where I think the rules in the beginning were kind of flimsy is on the non-payroll, because now I was in a webinar with the Wisconsin SBA a couple of weeks ago, and they were becoming, I think, really heavy duty on the documentation. They wanted complete copies of the lease, amortization statements from the mortgage company. As a lender, to be quite honest, on the lease, if you were to send me the cover page, the renewal statement, and the signed addendum, I would probably take that. Because we are going to get bogged down if everybody starts sending in their whole lease. Now, what you need to do though is make sure that, I believe they have a 5-year look back on this. For 5 years, you keep a copy of your lease, because if the loans are reviewed by the SBA and the SBA asks for more determination, the burden falls on the borrower, not the bank. It is the borrower's responsibility to maintain these documents. This is,
Liz, I think it's 6 years, actually.
Is it 6 years? Okay.
Yeah,
But so while you may have satisfied the lender, if the SBA comes back on any of these items, it's going to be on the borrower to provide proof that that the payment was made and that these were obligations that existed before February 15th. And then for the easy only, the easy is very, very easy to submit. You need the easy, these documents, and then your FTE information if it's required. So if you have a change, if you're not a sole prop, that's what the beauty of the EZ. I wanted to also mention on both the EZ and the standard, read it through once at least, and then even though it seems like it's not making sense, follow the directions for each line. And there is one line, it's either line 6 or 7, where it tells you to divide the payroll amount by 0.6, and you come up with this very large number. And many people have said, but shouldn't I be multiplying that? Or it's that or it's the other way, but I believe it's that, where you would normally do 60% of, but instead you're dividing by. We have questioned the SBA, we have questioned everybody, and everybody comes back and says, yes, that is the correct calculation. Now, if you follow that line to the letter and you do that calculation, just about everybody should have forgiveness on that. So it may look incorrect, but we have questioned this multiple times, and what we hear back from the SBA is, nope, do it that way. So to my mind as a lender, this is the secret blanket forgiveness that's maybe not so obvious to the rest of the world. Because if you do that correctly, you should have forgiveness. All right, now I can go on to the next slide. Thank you. If you can't use the EZ, don't panic. Read through the entire application. Contact your payroll provider. do schedules A and B first because you're going to need that information for the application itself. And this is not something you want to start on 10:30 at night after you finished homeschooling your children and did the books for your business, made your payroll, and made your plans for the next day. This is not the time. Maybe even take a PTO day and set yourself some quiet, calm time, because this application, although once you read it and digest it, it's doable, it is scary the first couple of times you look at it. So give yourself some space and some forgiveness time, and then work with your providers and you'll be okay. You could call your lender and say, you know, what is this? What do I need? And the lenders are helpful, but the lenders are not going to answer CPA questions for you. The lender will kick that back to you every time, because the lender, that's not our job, really. The lender isn't going to do the heavy lifting for you. Where the lender can help you, and this is an error I see a lot, is to give you the SBA loan number. It's interesting that in most of the loan packages produced, the bank number is on there, but the SBA loan number doesn't show up anywhere. So you do have to reach out to your lender, and they can find it for you. They have it. But don't be surprised if you can't find it, because there's a good chance you weren't given it when you started out with your new loan. All right. So the next slide, what do you need for the 3508? Pretty much the same for the payroll and the non-payroll, but when you get to the 3508 for Schedule A and B, that's going to require some reporting. And your payroll can help you, your payroll provider can help you with that, your accountant can help you with that, but the lender does need to see that information. And the reason for this is when we submit these applications to the SBA, the lender certifies, and this is, I think, kind of confusing for the lenders and the borrowers, and it puts the lender in an awkward position. But the lender certifies that, yes, we have verified these numbers, we verified the documents, we verified the calculations. You know, I'm not going to store these documents and I'm not going to send them to USBA, but yes, I'm willing to check this box and say these numbers are good to go. So as a lender, I'm not going to check that box unless I can see the mortgage statement or the lease summary or the utility checks or the payroll information. Because as a lender, if the SBA finds out that I flubbed on one, the SBA is going to come back and then look at all of my loans, and I'm going to be in deep trouble with the SBA because I just defrauded the federal government. So send in everything that's asked for and it will go through smoothly, but your lender is the one that's verifying this with the SBA now. In the future, it could be you if the SBA comes back and reviews. It's a given with the SBA that they will review all loans 2 million and higher. So on those loans, you could absolutely expect a review by the SBA. And those are ones where you really want to be working with your accountant on that. I also wanted to talk about that EIDL grant, because I think this is another area where customers were misled in the beginning. In the beginning, we were told, and we passed on to our customer, if these are for separate purposes and the EIDL isn't for payroll, you shouldn't have anything to worry about. Then when the applications came out, it states on the application for forgiveness that that grant amount will be deducted from your forgivable amount. People are going to have balances left on their PPP loans that they had not anticipated. And I don't know if that's going to change, but I think this is going to be a surprise to many people. So if you applied early on, say before June 5th, and you have the 2-year repayment, which is really going to be boiled down to 18 months, since you had 6 months of interest only, you potentially could have an extra $10,000 on that you're going to need to amortize over 18 months. The lender can change that to 5 years, but it's an option for the lender. We are not obligated to do that. So that might be a conversation you want to start now with your lender, because that's going to be a change that will need to be negotiated. If you applied after June 5th, you have the 5 years for repayment. That's a lot easier at 1%, but 18 months is going to be hard for most people to digest. And a couple other things I wanted to talk about on this is the same thing with the changes in the applications that were a surprise to people, is this related party rent? Now, a lot of people are going to say, well, how does the SBA know this is a related party? And that's a valid question. But if you recall, back when you did your application in April or June, you checked the box, I do or I don't have affiliates. I do or I don't have an interest in another business. If you check that, there's a good chance that you're paying rent to an affiliate, and the SBA realizes that. So, but aside from that, as a lender, I don't know how I would know. So this is something that, be aware that the SBA knows you have affiliates, and if it comes back, it's going to come back on the borrower and not the lender. Okay, we could go to the next slide. How do I calculate my income is a huge question we get all the time. Even though we send out the FAQs, and Mike spoke about this, so I thought I would boil it down to one slide that you would have that kind of explains if you're a C or F filer, you're a single, you're a sole prop, you're an independent contractor. These are the calculations that the SBA asks us to use. They also break out what can and cannot be included for forgivable amounts. Now, there's a difference between allowable expenses and forgivable expenses. And that's important because if you spend the money on something that's not allowable, like health insurance, in this case, it's not going to be forgivable, but it probably was an allowable expense, you're going to be okay. If you used the money to buy a car or buy a circus, then you're in big, big trouble with the SBA and the federal government. And you may not ever get another federal loan for the rest of your lives. But there is a difference between forgivable and allowable. And I just wanted to put that out there too. So keep this or copy it wherever you want. If you have questions, talk to your lender. But I think this is a helpful slide for when you're filling out your application in the middle of the night and you want to get it submitted as soon as the bank opens in the morning. On the next one, here are some questions that I didn't want to put out on many, many slides, but I thought might come up. What if my loan is not fully forgiven? Well, that's a good point. Then you have a loan that's with your lender. You can work something out with them. The lender has a lot of leeway in what they do with this loan after you get past the forgiveness portion. So talk to them, ask questions. If you're at, you just simply cannot do 18 months, whether you were before June 5th or after, talk to your lender. They can modify this. It's never hurts to ask. What if my application is not processed before the interest-only period ends? And Mike touched on that before too. You have an additional 10 months now. But again, reach out to your lender because you may need to have your note with the bank modified so that they don't automatically on November 15th start pulling payments from your account. Double check with your lender. And then the next one, can I appeal the lender or SBA decision? Absolutely. If the lender doesn't give you full forgiveness or no forgiveness, you do have an appeal. There is an appeal process and you need to reach out to your lender for specifics on that. Same thing if the request goes up to the SBA, but the SBA comes back and says, nope, we disagree. You do have the right to appeal. And this is why too, you should save your emails from your lender because the lender is required to notify you 3 times. When your application is received, the lender is supposed to send you a notice that's saying, hey, yeah, we got it. We have 60 days to look at it. We'll get back to you. When the lender reaches its decision, then the lender also sends you another notice saying, hey, this is what we've decided. We've sent it on to the SBA, and the SBA has 90 days to agree or disagree with us. Off it goes. When the lender then hears from the SBA, the lender is required to go back to the borrower a 3rd time and say, hey, the SBA agreed with us. You should expect your payment within X dates, and we will let you know, because we're required to, let you know when we have been paid by the SBA. And so it's really important because if you need to appeal this, it's going to be helpful to have these emails saying, hey, this is when I received the notice, this is what actually happened. And then where do I find my SBA loan number? We've kind of talked about that. Good chance you don't have it, and it's okay to call your lender and say, I don't know where this is. You won't look foolish because a lot of people never got that SBA loan number. And then I need to include the idle advance on my application. Will that affect my PPP forgiveness? Yes, it absolutely could. And if you do not include it on the application, it will come up when we submit it to the SBA. So that is an SBA determination, and they will kick it back at us. So that is all I have. Like I said, we've submitted 11. We haven't heard anything back. Thought I'd have more to talk about today, but
Yeah, I know what you mean, Liz. It's been a slow process getting information, getting guidance out of Treasury, and also now on the forgiveness processing side. All right, at this point, I'm going to ask Jeff Filler to jump in and talk a little bit about what he does in working on this forgiveness process and kind of making sure that everything is lined up the way it has to be. Jeff?
Thanks, Mike. So as all of you know, we're helping clients with the forgiveness application piece. So as Liz mentioned, please work with us to ensure that your application is complete and has all the correct information there. One of the other things that we do for clients that have over $2 million in PPP loans is we assist them with the preparation for potential SBA review and audit. So as Liz mentioned, everything over $2 million you can assume is going to be scrutinized by the SBA. Obviously, it's a lot of money on the line, so they're going to make sure that they're going to double and triple check your application, not just to verify whether or not everything is accurate financially, but also they will even likely be looking at whether or not you even qualified for the loan. And it's a very subjective process when it comes to the certification you made regarding this loan is necessary given the economic uncertainty with COVID. And so certainly if you are above that $2 million threshold, please work with myself or contact one of our people here at Boulay to talk to us about the preparation for a potential SBA audit. Like I said, it's a lot of money on the line for forgiveness. And so you're going to want to make sure that you have everything appropriately documented and rationalized and supported in the event the SBA does come knocking on your door and wants additional information around your loan. So that's pretty much all I wanted to mention. Thanks, Mike.
Excellent. Thanks, Jeff. All right, Tom, do we have some good questions that we can tackle?
We do have some questions. We've been answering some of them as we go, but there are a few out here that are not so much new issues, but maybe some old issues that maybe we'll walk through a little bit. The first one that comes up is retirement plan contributions that maybe you paid during the covered period in 2020, but maybe were 2019 contributions paid in 2020 or early payments for 2020 during the covered period. Can you talk about that a little bit, Mike, and how those are allowed?
Yeah, and that's something we were really hoping to get some further guidance on, because it's a fairly common occurrence that employers will pay their contribution in the following year. And the rules are basically set up on a cash basis. What was this amount paid during the covered period? It seems ripe for further guidance, because and that can be a big number if it's for like the whole prior year. But it's not clear enough to me that we shouldn't be including it.
So that kind of goes back to Liz's comment that we're working with the government. It's not completely clear yet. And so we'll keep our eyes on that one. Another question is, so the employer pays contributions to an HSA. So not employee withholding that goes, but employer pays contributions to an HSA. Does that count as health costs?
That's another one we were hoping to get some clarity on, because HSAs they're health related for sure, and they can only be used for health costs, health expenses, but they are kind of individual, and the way the statute reads is group health benefits, so that we're not sure about because they haven't told us. Hopefully you don't need it. I think it's conservative to leave it out if you can. But again, yeah, that's this one where we're really hoping to get an answer on, and we haven't seen it.
And maybe a similar question. Let's say that in 24 weeks, you use the 24-week period, you're clearly over the amount that you've loaned. So you borrowed 500,000, your payroll costs are in that 24 weeks or 700,000. Do you need to include all of those other expenses, or can you just stop at the payroll numbers, or what would you recommend?
Well, go ahead, Liz. I would like to hear your take.
Okay. Well, I have had people ask that very question, and I go back to their application first. And if on their application they said they were going to use it for payroll, rent, and utilities, then I ask them to include it. For sure do it then, but I also kind of think that if you paid those expenses, you aren't out anything by including them other than the work that's involved of including them. And if something should happen with your payroll numbers, I think it's good to have the other eligible expenses documented that, yes, we did pay the loan for this purpose.
Yeah, I think that's exactly right. And I'd be inclined to add anything that we can in there.
Right.
Say you don't need to add non-payroll costs if you don't want to, but like Liz said, other than the work in documenting them, it seems to me that it would be a good idea to, if I've got a $300,000 loan, if I can show 500, 600, 700,000 expenses, why not? I don't know that it'll be treated any different at the SBA, but if they're looking for, things where they could actually get something on the margins, it seems like if you have the overkill, then it might slip through easier. Of course, I'm just, it's a wild guess, but.
Complete packages do go through quickly.
Exactly, yeah.
All right, and there's a couple questions about commissions. So we've got a W-2 employee who maybe gets a base salary plus commissions, but their commissions are down this year in a COVID year. Does that reduction in commissions count as part of your 25% reduction that you have to be concerned about?
Yeah, it would. And commissions are just another form of cash compensation. So if those are down, it's through no fault of the employer, but it's the reality. We've had some clients that have kind of taken that into account and kind of given, I don't know if bonuses is the right word, or just a little extra compensation to make up for the commission income that some of their employees are losing out on because of the downturn in business. But yeah, any kind of cash compensation is going to be part of that salary wage reduction test. But remember that the salary wage reduction test only applies to employees that didn't make an annualized rate of 100 grand or more in any period, in any pay period in 2019. So it's not necessarily just the.
That's a good point.
So if they might have made $90,000 over the whole year, but if they made a good chunk of that in August, for example, then during that time period, they'd be over the 100,000 threshold and they wouldn't be in that computation at all. So your commission folks, because of the fact that commission and their wages are going up and down, if they have a really good pay period, if you annualize that out for the whole year, if it's over 100 grand, then you don't include them in that computation. So that might be a way out.
Okay, great. And one of the questions is on quarterly 941s. Let's say you want to apply in August or past August, but your 941 isn't done yet. Is the 941 required to be part of your submission package? And does that require you to wait because of that form?
Interesting to hear, Liz.
That's a really good question, and I do not have a really good answer for that, especially since in the required documentation they say tax reporting. But if it isn't complete yet, then you don't have any tax reporting to put in. I did have one customer who sent the 940 because part was for June. She circled the areas that were not part of that, early April. And then she provided an ADP report for the rest of the period, for the rest of the covered period. I took that and submitted it because she did provide everything she reasonably could. And I don't think the SBA and I don't think the lenders want all of their customers waiting until into October for September information. It's going to provide an even bigger clog.
Yeah, yeah. I don't think they're necessarily going to tie them together because, like for example, that you have that $100,000 cap, so then the numbers in the 941 won't necessarily tie to the numbers in your computation. I think it's more of, a verification. It's just one more, piece
It
of
is.
computation. That you paid because your second quarter one would have been done end of July, so you should have that one.
Right.
So I would include that. I mean, just to verify that, yeah, I've been filing.
Okay, and I think we're getting close on time, and I think the number one remaining question out there is just to reiterate 8 weeks versus 24 weeks, and what do we do when we're between 8 and 24 weeks? So maybe Liz, you want to describe again what you're doing as far as those periods?
Right.
It's a confusing issue.
It is confusing, and it's helpful to think of the periods as brackets. This is your data bracket period. So if you choose 24 weeks, then you put that bracket on the application. If you used up all of your funds in the middle of that period, that's fine, but still identify the 24-week period. Now there are pros and cons of doing this, that you might want to wait until the end and submit it. And this is something you should talk with your providers, because if your situation changes and this loan is reviewed later, you want to make sure that the information is accurate and you're not going to be in trouble. But certainly you don't have to wait until the end of the 24-week period or the 8-week period to submit the request for forgiveness.
Yeah, it's been a frustrating issue for us because you can see the question happening. So I'm choosing the 24-week period. I use up all my money over the first 15 weeks. I file for forgiveness. I put in my application. Yep, I've used all my money. I haven't waited off. And then 2 weeks later, you have a big layoff. I mean,
right.
That should be part of the FTE test, and it should reduce your forgiveness. But you've already applied.
Right. And I have customers flat out said, "Let me know when I can start firing people."
Yeah.
Yeah. And I'm not going to answer that question.
Tell them at least 24 weeks.
And I think one more, Mike, and then I'll let you wrap up with your close. The questions out there about the taxable issue, especially as we go over time periods. You've paid these expenses in 2020. You might get forgiveness in 2021. The quick answer is that we don't have answers yet on when the loan forgiveness is clearly not taxable income. But the IRS has said that the expenses, if they're forgiven, are not deductible. But those two issues are going to cross years, and we don't have guidance yet on how we're going to deal with that. So with that, Mike, I'll let you do your close.
All right. Thanks, Tom. Yeah, speaking of which, I didn't really prepare a close. Thank you all for joining. If you have questions, please, here's the email, learnmore@bouleygroup.com. Here's Liz's contact information as well, her email and phone. And thank you so much, Liz, for coming. This is
Thank you.
really great to get that insight of what's really happening at the other end, where the rubber hits the road and the next step on the journey of getting PPP forgiveness.
Do I have time for a quick closing? Because I do want to bring up real fast, probably the real elephant in the living room is, will there be a blanket forgiveness? And that question has been tossed around like a beach ball by Congress. And I even noticed some state senator or US senators putting that in their ads a couple of nights ago. Even if, so my answer is, people are wondering, should I put in a forgiveness app if it's going to be blanket forgiveness? And my answer is yes, because even if there is a blanket forgiveness, the SBA will still require you to certify to the fact that you use the funds appropriately. They are not going to close that door on themselves in case you are found to be fraudulent. So yes, still submit your application. It will just go faster if there's a blanket forgiveness. But right now, that's up for grabs.
Yep. Excellent point. Thanks so much, Liz.
Well, thank you for having me here. Great.
Wonderful. All right, everybody. Yeah, again, if you have questions, email us at learnmore@boullaygroup.com or Liz. You got Liz's contact here. And good luck as we all move through the process.
That's right. Have a good day.
Thanks for attending, everyone.